I've been trading for more than 10 years, and this is by far the easiest and most consistent strategies I have used for my day trading. Whether you are a beginner trader or an experienced trader, this strategy is one of the simplest I have ever seen. What you're looking at right now is an imbalancing pricing, and the range that you see below, the zone you see in below, this is called the fair value gap. What in this video, what I'm going to do is explain to you guys exactly what a fair value gap is, how to identify it, and how exactly you can execute those trades. All right, so let's pull this right here. I have a whole presentation done for you guys. We're going to look at that. So my goal today is to make sure that I can help you guys master how to trade small cap. This is what I want to do. Help you guys master that. How to trade small cap with fair value gaps. It's the easiest strategy you'll ever see. First thing first, the best way to use this strategy, you're going to have to trade small cap. By small cap, I mean companies that are between $300 million to $2 billion, and you also need companies that have a lot of volume, a lot of the relative strength, and the relative volume is actually higher. So there's a lot of buying and selling this high volatility, and you need to be quick. All right, because we're going to go in the very short time frame. We're not staying in for long. We're just trying to get in, get a quick move, and get out. That's all we're trying to do. The first rule of that, this is your roadmap. Your trading roadmap for the fair value gap is the first. You have to wait for the first 10 minutes. So the first 10 minutes the market open, you're not doing anything. Absolutely nothing. You're just sitting by and waiting for that candle to completely close. Once that candle is completely closed at around 9:35, right? Then that's when you're going to move down to the 1 minute time frame so you can go identify the fair value gap. So when you mark the high and the low, just so you have some reference point, that's all you're going to do with the first 5 minutes. Okay. Again, this is what a fair value gap looks like. It's like I said earlier, it's an imbalance in the price. So you're looking at the gap. You look for the market imbalance. What they mean by the market imbalance, you want to see a candle. I'm gonna focus on the bullish side, so it's a green day, so the market is going up. So the first 5 minutes you wait, so you can get clear, sort of get a good idea of clear direction on where the stock is going to go. All right. Then when you log in, so imagine those candles are these are 1 minute. All right. So this is a three candle pattern. Okay. So this first thing you do, you go down below. You're going to go to the top of the previous candle of the big candle, right? Like the big candle with the big bullish thing. That's the first thing you're going to mark, and the second thing you're going to mark is the bottom of the third candle. All right, so the top of the first candle and the bottom of the second candle. So that gap, that is your fair value gap. All right, you are sitting right there. You have what they call a mortar bar, the large candle that shows the volume really increasing. So this would be your mortar bar right there. Okay, the small dose I'm going to skip because I want to make sure that I keep this a lot easier, a lot smoother for you guys. I just wanna leave that. So, for example, right, when you go into a chart, actually, let me jump in the chart real quick and show you guys what I'm talking about, so that way you guys can see it exactly. We're going to go into replay mode. If I go into replay mode and I go here, right? So I roll this. Now we're playing. This candle is done. Okay, I'm gonna stop that real quick. All right. So do you guys see how I mark this here, right? This is how I mark this here. So you can see already this is 1 minute market open here. 1, 2, 3, 4, 5. Okay. This is the fifth. This is the 5 minutes. Now I'm in the 1 minute. All right. So if I switch it in the 5 minute, you see this is the 5 minute. The fair value gap does not have to happen outside of, you don't need a break. Not It doesn't have to happen outside of the 5 minute candle. Okay, so we just go down. What we're looking at right here, we get the bottom of this candle and the top of this candle. You must wait for the third candle to close. Okay, don't rush in. You must wait for that candle to close. All right, we're not rushing in. We're just being patient. That candle closes. Okay, boom. There you go. Right there, right at this level. Once this candle come back right to that fair value gap zone, we're triggering that trade. So we're going in. Right now the price is 265, right? Let's make sure we put that here. So okay, 2.65, and we are buying about I'm gonna do that based on the way that I trade. So say we are buying 1,000 shares, okay? When I take my starters, that's typically how I do it, like beginning of the day. Okay, so I don't want to go too heavy beginning of the day. I just wanna get warmed up. If it turns out to be a good trade, it's good. I'm okay with it. I'll live with it. If not, if I get stopped out, it's okay. But let's do it that way. Just 1,000 shares. It's not a whole lot of shares that not 10,000 or 20,000, right? So we're in for 2,065. Okay, so that's how much we just put in right now. 2,065. So this is a live example. Again, we just triggered at 265. We're in. Your stop loss is right below the zone. This is where the stop loss is sitting, right below the zone. The stop loss is right there. And now we are going to roll this. If we roll again, boom. This is the very next minute. We're talking about just 1 minute. I'm not talking about a whole lot of time here. We're just talking about 1 minute. That's it. Let's see if I just pull this up real quick. Calculator. Bringing up my calculator here. Okay, I'm not gonna download that down here. Everyone already know exactly where we got in. You see where we are now. At that point, so we have 1,000 shares. Now let's see what we have. We got to as high as 320. So there's two ways of trading that. You can just let it go, right? You can just let that go and just do a 2 to 1. Rule of thumb, do it 2 to 1. The way I trade, if it's really tight, I just let it run, right? I'll just take some profit every now and then, or when I see any type of weakness in the price action, I'll just get out. So if we in at 2.65, 3.17, so right now we have a 0.52 in terms of profit. All right. So this is what we're looking at right now. We are talking about we are talking about a profit. We are talking when I'm that 52 cents. That represents the difference between when we buy. Okay, let me just do it that way so no one gets lost. All right. So this is 2.65, and a minus. Actually, that's 3.20 minus 2.65. Okay, 3.20 minus 2.65. Actually, I don't know what I'm doing, guys. That's actually point. I'm cheating you guys on some money. Okay, so that would be 550 actually. Okay, there you go. So that gives you a point 50. That point 5. Okay, 0.55. This is a per share. All right, that is per share. This is 1,000 per share. Now, what just happened in about what 2 3 minutes? We're talking about in about 2 3 minutes. You just made $550. All right. Again, I don't want you guys to start thinking about, well, I see people posting they make $20,000 and whatever. What did I say? What is the motto of this channel? POP, pop, process over profit. Get your process in place that will protect you. When you can scale up, you at the level to scale up, you do it. But you don't try to wash in and just thinking about, well, if I took 5,000 shares, I would have done that. Again, depending on the size of your account. If your account allows you to take 5,000 shares, then that's what you would do. But if you just starting out, you don't have a whole lot of money into place. Maybe you just put in 5K, or you just put in 3 grand and whatever in your account. You have to be careful because you have to manage it. Because at the end of the day, right? Because if we're looking at the stop loss, where the stop loss is right here, it actually was a tight stop loss. That was a really, really good entry because the stop loss is so tight. So your risk reward ratio is actually really, really, really freaking good. All right. So as of right now, if we do that, you're getting a risk reward ratio right now. That's actually, let me see. They always say try to get a 2 to 1 for your risk reward ratio. This right here, right now, is insane. You're talking about like tw- 12, 13 risk reward ratio. And that's in a matter of just a couple of minutes. Okay, and that's it. Just from that, you can, even if you just got out on this candle, right? You could just be done for the day. How many of you guys watching right now do not make $550 per day? Okay, there's no. By the way, this is not like a shameful thing. If you're making 550 per day, you're making over 100 grand a year. And we know the average American does not make that much. So the likelihood of most of you guys that are watching this video makes over that is slim to none. So I'm talking to everybody. So if you make that, if you make up above that, that's great. I'm happy for you. Keep pushing it, keep getting it, right? The only thing I would say is let's try to get you to the road to freedom where you could be your own boss, have time in your hands to spend time with the family and do your own thing. And if not, you just want to do that as a side hustle, whatever it may be. All right. So this is the strategy. It is very, very, very simple. It's not complicated. You just do that. All right. Now, I let it one. You can let it one. Okay. I'm going to pause it again right here. Let me pause it again. So this was one trade. You couldn't take that. And as soon as you see this, you're like, okay, you know what? Price pull up, pushed up, and it pushed right back down. So I got out. You can just trade it that way. And that is perfectly okay. But guess what happened? If you guys are paying attention, what did we see? Again, let me move this a little bit so everyone can see. Okay, what did we see? We can see, okay, let me move those out of the way. What we can see here is a change in character. By that I mean we can clearly see volume came in. A lot of buyers just pile in and they push the price up again, right? So that means what? We're going to have another fair value gap because that's a big candle. A lot of buying came in. Therefore, we have another fair value gap. So how do you draw that? I'm going to take the top of this candle to the top of that candle. So that means, once again, my entry would be right here, 320. 320 is my entry, and my stop would be right there, right? This is where your stop was going to be, right below that level. Let's say one like 308, 308 or 305. If you want to put your stop right there, you just do that. Okay? Now let's roll that again. If you have another 1,000, we're still good. Okay, pause this here. This is why I always go just a little below the zone. This is the reason why. You guys did see how it just dipped just a little below the zone, right? Just a little below. This is why I don't put it exactly at the zone, at the bottom of the zone. I put my stop loss slightly below the zone, just a couple of cents below. All right, just a couple of cents below. That's the way I do it. And when you look at that, if I zoom in, you can see that, right? This is the bottom of the zone, but it dipped just slightly. Instead of 310, it went to 309. All right. Try to take stop losses, but we stay cool. We are in. All right. So we never got stopped. And now, so we got in at 320, and now this is at what? 335. Okay. So this is 335. All right. Let me just click that. Again, remember, we're trading we currently trading with about 1,000 share blocks, right? That's the way I'm doing it. I'm not going crazy just to try to show, hey, you can make $20,000 or whatever. Okay, so this is the first trade. This is trade one. So second trade, we got in at 320. All right. So we bought 1,000 shares. Again, if you multiply that, because we buy that for 3.20, okay, so that will give you 3,200 investment. Okay, that's 2,200. So since we bought it at 320, and our stop loss is at 10, so we're looking for at least a 2-to-1 ratio. So a 2-to-1 ratio, meaning we are looking for a move. Our take profit, if you just want to take profit out of 2-to-1, stop loss is here. We move that up. So you're talking about like right around 340, 345. All right. Well, I guess since you came in right there, so we're looking at 320. All right. Okay. 340. Let's say 340, which is the high, the previous high. So we're targeting the previous high right now. Okay. But because we can see there's momentum coming, so it's possible we can have a push, right? It's possible we can have a nice push on the way up. So let's see how we did for this trade. Okay, we're moving up, we're pushing, we're pushing, we're pushing, we're pushing. There you go. All this I'm holding. Why am I holding through here? First of all, when I there you go, right there. When we get here, that's 2-to-1. When we get to 2-to-1, this is the way that I trade. I'm taking some profit off. Okay, that's just how I trade. I would be taking some profit off, but let's say hypothetically you just kept that. This could have gotten you all the way up to about 378. Okay, so let's do the math again, guys. Let's do the math again. Let's see what we're looking at. So that's 1,000 shares. No, 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 no. That's 3.20 um minus, let's say you didn't get out all the way up there. All right, let's say you see some you sort of see some weakness here, so you say, hey, I don't like the way this candle, even though it's a big bullish candle, but I don't like the way it closed. So therefore what I'm going to do is I'm going to get out because I can see sellers push the price down. So you're getting out at 367. All right, so that gave you about 37 cents. Okay, so you just risk 10 to make 37 cents. Let me just finish that. Mine that's 320. No, that's 3.67. 3.67 minus 3.20, and that will gives you 47 cents. I'm lying. I don't know what was going on with me counting this tonight. Okay, so this is what we have. All right. And guys, you're going to see sometimes that like I fumble these things like that. I make little mistake because I don't believe in me just doing perfect editing. Because I think perfect editing, I can be talking just reading a script and taking pause and I'm not judging anybody who does it, but I just felt like it's more personable and I can explain to you guys better if I'm doing this live. You can see if I make mistakes, you can see it. All right, like there's no editing here. You guys can see me doing everything very fluid. When I messed up, you're going to see it. That's why we do that here. Everything we're doing, either I'm doing it live, I'm doing the recording live, or I'm doing it live on YouTube. This is how this channel is done. I don't do any editing of my videos. I get the video done, and I post it. So you're getting raw, direct information. All right. So that means for this trade, we end up pocketing. So that's 1,000 per share that we're going to multiply that 1,000 per share by 0.47, which would give us what? And that would give us about $470. Okay? So this is trade one. I'm sorry. So this is trade one, this is trade two. This is your result from both trade. So you add that up, right? Our total adding this up, I believe it's 1,020, but I'm just going to count it anyway because since I've been butchering every single math problems I've been doing tonight. So yeah, that gives you about $1,000.20. Okay, that's about $1,000.20. Now, let's take a look to see if you're greedy, you can stay in the market. All right, you can stay in the market if you're greedy. You wanna keep trading and whatever, you can do all that. That's you. Now let's take a look. How long did you guys think it just took you to do that? That's about $1,000. How long do you think that just took you? Look at the time right now. All of that move that just happened, all of that just happened right before 10 a.m. This is what you just made by trusting your process and following your process. This is what you just made in 30 minutes. I do again. Let me zoom in on and talk to you guys directly. Please don't look at this and say, you know what, if I can just do this in 30 minutes, then what if I trade for 3 hours? So that means 30 minutes, 3 hours, that's 6 30 minutes. So 1,000, multiply that by six, multiply that by six. So every 30 minutes, if I make $1,000, so that's $6,000 per day. Please don't do that. First of all, you don't know. There might be days where you don't see that show up like that, right? There might be days where it's a stock that you cannot trade on the platform you use. These things happen. You can't control that. There might be days where a pullback happen and it hits your stop loss. All right. So don't look at it that way. Just look at your winning your green days, your winning trades, your winning days as just that. It was a winning day. I got my money. I am done. Don't get overly greedy when using this trading system. I always advise people don't do any more than 3 trades. You do 3 trades, what no matter what happens. You do 3 trades, you make good money, be out. Or I say 3 trades or by 11 a.m. 90 minutes. You get 90 minutes for day trading in the market because that's most likely when you're going to get the cleanest price action, the highest volume of the day. So you just do that in about 90 minutes. Once that 9 minutes is done, you're done. Your trading is done. So this is what the fair value gap is, guys. And this is what you can do by just following the process. Again, the fair value gap is a process. Just follow it. It's a process, man. I'm telling you guys, it's a process. Just follow the process. And I know I got away from the way I wanted to do things. Actually, I had a whole presentation ready for you guys, and I felt like, you know what, just going on that and just doing the replay and showing you guys live how this would work out, how this played out. Actually, one thing I'll let you guys know, that's actually a trade, a stock I traded today. All right, I traded that stock today. Um, Precisely, I'll just leave it at that. I'll just leave it at that. All right. That's all. You see, this is the whole presentation I had for you guys. I'm like, you know what? Instead of doing the whole presentation, I'm going to focus on this thing. But I wanted to come back and just talk about a couple of things that I did up the presentation because I think they are important for you guys. Best practice to perfect the strategy. Make sure you do that in a demo account. Do not use real money yet. Do it in the demo account, and when you first start doing it, do it with very small size. Don't start jumping in with your full size account. So do it that way. Keep a journal. All right, keep a journal and make sure you do review your trade to make sure that, hey, am I really getting the fair value gap or am I forcing it? Right? What did I see? Make sure you track that. Review again. Do your reviews daily. Start small. Be patient. Be patient. Process over profit. Okay. The 935 rule. These are your key takeaways and core principles for consistent trading. Wait for the first. Don't trade in the first 5 minutes. Wait for retest. Risk management. Don't risk much. Always go for at least a 2 to 1. All right. If the fair value gap is really large, just reduce your share size. Just reduce your share size. Don't go too heavy, so that way it doesn't put you outside of the amount of money you can lose and still have a good day. All right. Identify the pattern. It is a three candle. The fair value gap strategy is a three candle pattern. Again, this is where risk. This protect your capital. That ties into risk management. Protect your capital. Stay disciplined. Again, guys, this is where you start your journey, right? I just give you a specific strategy. It's a very easy strategy to follow. It's not very complicated. It is super easy for you guys to follow. So take the time, be patient, manage your risk, follow the strategy, follow the process. Again, make sure you guys gotta have a trading plan, no matter what you do. The trading plan is something that you must have. I keep saying that in every single videos that I make, guys. Have a trading plan, understand what you're doing, follow the process like it's robotic. Again, thank you for tuning in. If you like this video, I have a video for a bigger strategy for those of you guys who share options. So like this video, comment below. If you want to see a full execution play live in the market when I'm trading myself, comment below and let me know. If that video gets over 1,000 views, I will drop that video. But if I don't get the love of that video, I'm not going to drop the new one. So make sure you share that video, like, comment, and let me know what you guys think. If you learn anything, again, make sure to let me know. I hope I did bring you guys some value today. Have a good one. I will see you guys on the next live. And peace. Enjoy the weekend.